Welcome to The Point, News from Noise daily market call presented by Kattan, Ferretti Financial. We are cutting out all the clickbait, the advertisements, the self-promotion content that you're getting from CNBC, from Business Insider, from Bloomberg, and we're only taking the news that matters and condensing it and putting it right in your inbox daily. I'm Brad Roth, CEO of Kattan Ferretti Financial. This note is being put on by Bobby Fry and Cameron Roth, who work very, very hard, late nights, early mornings to get this to you every single day. Do not forget to subscribe to this note. Also, do not forget to subscribe to our full podcast, The Investment Advisors, which you can find on iTunes and Google Play if you want a really deep dive and deep look into our firm, as well as get great insights from all the guests we have. So let's get right into it. This is The Point Daily Market Call presented by Kattan Ferretti Financial.
Good morning. Thanks for the intro, Brad. Today with the Paris Agreement covering the front pages of every financial website, I think it's important that we delve into the jobs numbers and the news that's actually affecting markets. So, Cameron, why don't you take it away with all the news headlines?
Yeah. First and foremost, the big jobs report today at 8:30. Solid numbers will definitely mean that it's all but certain that the Fed will raise their rates at their June meeting, and the federal funds futures trading will likely see higher expectations for the Fed to raise rates up to 2 more times this year. The Paris Agreement, you see it all over the news, and withdrawing from that has little effect on how the U.S. or the world will actually function. But beware, Goldman's CEO is against the withdrawal from the Paris Agreement. However, he trades heavily in carbon-related and climate-related financial products. General Motors traded higher yesterday despite sales data that looked awful on the surface, and digging deeper, while their unit sales were lower, their sales of high-ticket and high-margin vehicles were higher, especially commercial vehicles and Cadillacs. The U.S. manufacturing continues to expand, and with economic data accelerating in the U.S., bubble concerns are not yet much of a focus. But this is an interesting read on some of the nation's highest price housing markets, and the size of homes may be shrinking. Tech stocks make up the highest share of the S&P 500 since 2001, but just a reminder, it is not 1999. Competition is not slowing down between Amazon and Walmart, as Amazon looks for factory space in Australia, and Walmart is even testing having their employees deliver packages on their way home from work. And the competition between Lyft and Uber is actually real. Now looking across the pond, European markets continue to trade higher as economic data in Europe and in the U.S. continues to suggest that growth is accelerating. There's 6 days until the UK's general election, and it is a tight race. The UK's Metro Bank has purchased 600 British pounds of buy-to-rent mortgages from the U.S. private equity group Cerberus. And the Russian economy minister said Russia will have no problem surviving with oil below $40, but some markets tend to think otherwise. And also that Greece is reporting better than their expected growth. And looking into Asia, the Chinese yuan has had a much stronger week than most expected, given growth that is decelerating and worries about debt levels, as the government is known to heavily manage currency prices. China is building their own jets and airplanes, and there's also new sanctions for North Korea for the weapons program. Now, Bobby, why don't you tell us a little bit about this jobs report at 8:30?
Yeah, I think there's a couple of themes here, right? Number one is we saw great jobs reports this whole week. I think when we're delving into the jobs reports today, we need to look at wages especially. How are wages going to affect? Are they growing? Are they going to affect consumer spending, which, while consumer confidence is high and consumer spending is accelerating, the rate of acceleration isn't quite what it could be. But most importantly is, as the market hits all-time highs, everyone's question is probably, when's it going to fall? Should I get in here? Where should I be? Where shouldn't I be? And watching data and charting its rate of acceleration is what's going to be the leading indicator towards when the market may pull back, right? Until then, you keep with things that are working. We just got out of an earnings season that was the best earnings season in 6 years. And I'm not really a fan of a lot of the comments from fund managers at the end of May who kind of got lax on their, what their standards are for managing funds, right? So just because the market is ripped to this point doesn't mean that without a process, you pull your client's money out of what's working and jam it into something that's seemingly low like commodities. If you took your money out of tech and put it into commodities in May, commodities lost 3% and tech gained 3%. That's not doing your job. So we're going to take a look today and see if this data confirms that economic data is still accelerating and growth is accelerating. Maybe it's not quite at the level historically at the 3.5% growth level that we've averaged over the last 50 years, but growth is accelerating, profits are accelerating, and it's the rate of acceleration or deceleration that moves markets.
Yeah, so we definitely see this market trend to continue in the upward direction.
We're just going to keep watching data, and if it accelerates, you start to delve deeper into which sectors are working, which sectors aren't working. Is energy going to keep underperforming in utilities? Is tech going to keep outperforming? What's going to happen with banks when the Federal Reserve decides if they're going to raise interest rates 2 times this year or 3, right? So federal funds futures is what we'll be watching today after the jobs report comes out, because that's a great indication of how the market's pricing what the Fed will do in the future, right? So it's all but certain right now that the Fed will raise interest rates in their June meeting. So the real question will be, what is their commentary at the June meeting? Are they talking about inflation? Are they seeing any risks? Are they talking about the unwinding of their balance sheet? And are they talking about how many more times they may or may not have to raise rates this year? So that's what we'll be focused on. But I know you were focused on the NBA last night because it's your favorite league, right?
Quite the opposite, actually. I was not focused on the NBA because I just don't care.
You don't care one bit, do you?
I don't care one bit. I think it's a joke. Not the players are fantastic athletes, don't get me wrong, but I think the league in general is just absurd. The Warriors did defeat the Cavaliers 113-91 in Game 1 last night of the NBA Finals, but all ESPN seemed to care about was the fact that Rihanna was there. And it's the 3rd time these teams have met in the finals in a row. What's the point of even playing the regular season? I mean, it's just people blame Kevin Durant for the parody. I don't see it. This has been going on for 20 years.
Thank you, Cameron. If you want to read any more out there about Cameron's thoughts on sports, we do include a little sports section at the end of the email newsletter that we send out every day. To subscribe, send an email to robert@kattanferretti.com or hit KF Financial on Twitter, and we'll make sure it gets to your inbox. Anything else that you want to delve deep into that was in the note, we do provide links. Other than that, have a great Friday. This was The Point, brought to you by Kattan Ferretti Financial for June 2nd, 2017.